Good morning, everybody. Well, good evening, good night, wherever you may be around the world. It is awesome to be here with you guys. So, welcome to this game plan session. And again, my name is Gareth Soloway, Chief Market Strategist at Verified Investing Crypto, as well as InTheMoneyStocks.com. We'll get more into that a little bit later. But the bottom line is I want to get into the action this morning. My goal for these game plans is to set the table so everyone goes into the market, the stock market open, the crypto day, the commodity day, kind of understanding where the charts are at, what to expect, and ultimately potentially make some good money off of these streams. All right, so let's get right into it here, guys. Number one, we have a market that's basically on the flat line. The SPY right now, the S&P 500 is trading virtually flat. This coming after the jobs data, the private sector jobs data came out. So this morning at 8:15 a.m. Eastern time, we've got the ADP private sector numbers. Now, these are not the non-farm payrolls that will come out on Friday. This is just the private sector numbers. The private sector numbers coming in at 242,000 new jobs created. That was slightly better than expected, So the markets were initially kind of flattish to positive. Then they sold off a little bit. Now they've come back up a little bit as the markets are disregarding this and turning their attention back to Jerome Powell. Now you might say, well, why back to Jerome Powell? What's the big deal here? Well, yesterday he came out and he basically said that the Fed was going to be very aggressive still on interest rates. And basically, he even alluded to the chance that there could be a 50 basis point rate hike later this month when the Fed makes their decision. So that was a little bit of a shock to the market. We saw the S&P 500 collapse pretty sharply here. In fact, let me go to my charts and we can take a look. This is the daily candle right here on the S&P yesterday. So the S&P 500 had a big drop of about 1.5%. That's a big drop for the S&P 500. Now, the key here today is that he's testifying in front of Congress again. So he will again be making comments before he testifies. And what's so interesting about this is he's going to have a chance to correct or change anything he said yesterday that he did not like. So for instance, if he didn't mean to create a sell-off in the markets, now let's be fair. I would almost guarantee he was trying to create a sell-off yesterday. But let's just say he didn't mean to. He could always walk back his comments today, which would then create a rally in the market. So it's almost like a take two. Like if you think about a movie where they're like, okay, that was first take. Now we'll take two. We'll do it again. This is his chance to do it again. Now, he may reinforce those hawkish comments. That's probably the more likely scenario, which then we have to watch the U.S. dollar. Now, the dollar had a monster move yesterday, guys. Check this out. The DXY, that is a huge daily candle on the DXY. Now, it didn't break out. Now, a lot of people think it broke out. Look at the high right here. It closed right at that exact high going back to February 6th of 2023. Excuse me, January 6th of 2023. So that high was exactly where we closed. Now in the overnight, look at what's happened here. Here's your candle. I don't know if you guys can see it, but here's your candle in the overnight. The dollar was higher. It's backed off just a little bit. If we go to the intraday chart, here's your ADP private sector jobs number, 10-minute chart candle pop. And now it's walking back down a little bit. And you can see it's not really in the scheme of this chart. It's not that big of a move on the 10-minute chart. That's why the markets aren't reacting very much. So the bottom line is you should get his comments around 10 a.m. Eastern time. He will be testifying after that. So the markets will be tuned into his commentary. That will be a market moving event. Now, tomorrow, let's touch base on tomorrow real quick. You have jobless claims. No, it doesn't matter to me. Jobless claims, who cares? Friday is the non-farm payrolls report. If that number comes out stronger like the ADP number, the dollar will go higher and the markets will sell off. And by the way, that goes for cryptocurrency as well. The crypto markets will also sell off. Now, the crypto markets, let's touch base on Bitcoin here because I'm sure everyone's wondering about that. The crypto charts continue to languish. And what I mean by that is you now have a potential breakdown of this little mini bear flag right here with a short-term target of around 21,500. So we're only about $500 away from that. That would be your short-term support. Now, again, this is only a minor support. Now, this is going to be a little education I'm going to throw at you guys. All right, so what we know is that this line connects through here, which then connected through here, which then connects right through this area. Now, a lot of people think this is major support. Why? Well, this was the pre-FTX high. It collapsed. Here was your FTX high resistance, pulled back, broke out, and hit. Now, in essence, it is going to be support. So 21,500 is support. The reason I classify it as minor support versus major, and by the way, the difference between minor and major, this is important. Major support, you expect a big bounce and a significant amount of time that the chart bounces off of that level. So it could be a month, it could be 3 months, it could be something like that. Minor, you expect a smaller bounce. So you still expect a bounce, right? I mean, that's why it's still called minor support. But again, the key is minor support, you get a small bounce and it only stays above the level for a short amount of time. So again, that's the difference between major and minor. People are always asking me about the difference between major and minor support or resistance, by the way. So this is minor. The reason it's minor is you just hit over here and you got a bounce. It wasn't even that big of a bounce. And then you came in. The other thing I want to point out to you guys, and this is a little spooky, look at this formation. All right. And I showed this in my daily analysis video yesterday, as well at inthemoneystocks.com. But if we zoom out here, look at that pattern. Does that look similar? So again, look, it's a mini-me of the bigger pattern. And so what part of technical analysis is recognizing the similarities of charts. Now, you don't necessarily, if there's no guarantee it plays out the same way, but in general, it's a probabilities game. And always remember that. So if you have a chart setup that did something in the past, and if you look at past chart setups that, 9 out of every 10 times it does, A, B, and C, well, then what you do is you say, okay, well, probabilities dictate I'll get the same ABC move. All right. Now, again, it doesn't guarantee it because you're only getting probabilities of, let's say, 70, 80, or 90%. But again, it puts you in a position to be the house of the casino versus the gambler. And we never want to be the gambler, right? I mean, the bottom line is the gambler is ultimately you play long enough, you're going to lose at the casino. It's just the nature of the beast. Okay. So short-term support on Bitcoin remains at 21,500. If that breaks, you have this little pivot low right here around 20,400 or 500. Ultimately, I'm still anticipating a fall to about 18,000 and change. So we'll see again when that occurs. But again, you do have two minor supports that you have to get through. The only thing that would change me bullish to a 30,000 target, you would have to take out this high pivot as well as this upsloping line right here. So basically, if you get through 25, 26,000, you should very quickly go to 30,000. Right now, the charts are not in favor of that. They're definitely kind of in the more downward bias camp. Okay, so that's where we are on that one. Let's take a look at natural gas. I know everyone loves their natural gas these days because it's so volatile. We saw a monster bounce on this. And again, look at the size of that bounce. Then we came into Monday with a nasty reversal, pause day, and a small sell-off today. This could be starting to make a small bearish flag position, which in general, you'd start to favor the downside. Now, the downside for me is somewhat limited, probably around $2.40 on this chart. But again, that is your downside support. I will probably be looking to buy it there. Now, I was long Boyle. Boyle is a 2 times long ETF for natural gas with members of inthemoneystocks.com. We were down on the position decently because it kept on falling. It then bounced. We ended up taking a profit on the trade, and now it's back below where we exited on this fall, and we are looking to potentially get back in. So again, $2.40. See this low area here where all these lows kind of coordinate? That's generally your level around $2.40 on the chart. All right. Next up, we got to go to gold, guys. I know you all want the gold analysis here, which continues to be my favorite asset for 2023. Again, the key here is, and think about this, and I said this yesterday, I had a great interview with David Lynn. I'm sure a lot of you guys caught it on the post that I did on Twitter, but just a fantastic interview on his new station. But the key is this, is that if you look back here when gold was at $20,070, interest rates were 0%. Now, we know that gold falls when interest rates rise. Now, if you had told me back then that interest rates were going to go to 5%, I would have said, okay, gold's got to go down massively from 0% on interest rates to 5%. And so the fact of the matter is we're 10% off the all-time highs on gold with a move of interest rates from 0 to 5%. That's incredible the staying power of gold. In addition, we know this longer term move up. This is bullish consolidation. Absolutely. I can erase these other candles, these other trend lines, because really all you want to focus in on right now is that bullish channel of consolidation. When this thing breaks, you're going to go right to the double top, which would be triple top at that point, and then you'll zoom through it. Okay, so again, my end of year target is at least the highs, the all-time highs on gold, and it should honestly be higher. This to me is going to coordinate, and the reason why you're going to get a move on gold significantly in the second, third, fourth quarters of 2023 is you're going to, number one, slip into a recession with the economy. By the second half, we're in recession, probably by October, November, I'm thinking. Okay, so that's number one. Number two, that's going to make people fearful about buying stocks because earnings are going to drop. So earnings are going to drop. That means the PE ratios, the valuations of stocks have to drop as well. That means that stock market is no longer even an attractive asset to invest in, especially with interest rates still around 5%, which they should be in the second half of this year. In addition, the analysis is showing that while inflation is always easiest from 9% or 10% where we were down to 5%, getting that last 5 to 2 is going to be ridiculously hard, which makes it an inflationary environment above 2%. So not only is the Fed going to be on hold from really doing much, they're not going to raise interest rates much more, maybe another couple meetings, but they can't, once the economy slips too badly, once the jobs numbers start to weaken, they can't raise interest rates anymore. So they're going to go to the sidelines. Inflation's going to stay high, and the stock market's going to falter significantly with an earnings recession. That is the money-making core to a breakout on gold here. In addition, I want to show you guys this. I've showed you guys this before, but look at this pattern in gold. So this is your monthly chart on gold. All right, I want to show you guys this. You have a move up for about 2+ years. You have consolidation for 2+ years. Now, remember that. Up 2 years, consolidation for 2 years. Okay, next, let's go all the way back to the 1970s. Okay, and look at this. Here's your monthly chart on gold back then. About 2 years of consolidation, of up move, consolidation, downward move of 2 years. Looks familiar, right? And then look at what gold did after that. Look at the run gold had to the upside. So what you're doing here is you're replicating the move that this had in the 1970s, which, by the way, look at the inflation numbers. It's the only comparable time when we can look at the inflation numbers and match them up. Other than that, we've never really seen inflation basically get as high as about 10% in recent history. And that was still, 50 years ago. So it's still a while ago. But nonetheless, that is the best case scenario for gold. Now, gold did about a 9 or 10x here. I personally don't think it's going to do 9 or 10x because you have Bitcoin, you have other assets, right, that are starting to take a little market share. But do I think, again, a 3x, a 4x in the next 3 to 4 years? I do think that is a possibility. Also, other countries are buying massive amounts of gold. Their central banks, their governments, smart countries are loading the boat on gold. What I always say to members at InTheMoneyStocks.com, verified investing crypto, is you got to follow the big money. If you see central banks buying gold, why are they doing that? Like these guys, even though I disagree with a lot of their moves, they know what they're doing deep down. They know that the printing of money can't end well. They hope that they can slip out of it. They hope that they can maneuver and somehow find a keyhole to slip through. But the essence of it is they know that printing of money is not a long-term solution. Yet because of political pressure, yet because of other factors, they're forced to do this. So again, this is where we are, okay? All right, so that's where we are at this point in time on the gold chart. Silver had a monster dip yesterday as well. Now, a lot of people have said to me, well, why is silver weaker than gold? I mean, why did silver make new lows short term yesterday when gold, if we look at gold here, did not, right? Here was your low a few days on gold. And the answer is, simply put, you have the industrial component of silver, right? So silver is used in electric batteries, in other things as well. And so there's this component where with interest rates most likely going higher, it's going to slow the economy more. And that's ultimately going to put pressure on silver. Now, silver to me still performs beautifully if you look far enough out, 6, 12, 18 months. I still think silver probably is north of $50. But in the near term, that's exactly why silver made a lower low yesterday in the near term versus gold. Okay. All right. Right now, SPY is up about 51 cents on the day. Where should we be looking on the day's market action? What's moving in this market environment? Let's take a look. And I appreciate the kind words, guys. Thank you so much for the kind comments. And by the way, please like this stream, like this channel, tell your friends, share it. My goal is to grow this to be like, 20,000 viewers on the live version. That's the goal here, folks. So again, anyone who shares it, my deepest thank you from me to you. Anyone who likes it and just tells their buddies about it. My goal is to give you guys hardcore alpha, hardcore education in here that you guys can actually put to use. So some of these concepts, the what's a major minor trend line, how do you figure that out? Though that type of stuff, really major alpha going forward. All right. Yes, we can take a look at Solana real quick. Let's take a look at Solana. I am short in verified investing alerts. Solana, love the breakdown. We're short from north of like 25 bucks here. So we are deep in the money on this. The next support you're going to have is going to be right here. Let me mark this off for you guys. All right. And I'll show you where I'm going to actually buy Solana. All right. So here's your next support around 1750, 1775. And then after that, where I would buy it would be right in here, right around 1465, basically a Pierce of 15. I would start to get long Solana. All right. So again, that's a good one to look at. Let's take a look at Matic real quick. Then we'll do a few stocks as well. By the way, stock wise, there's not a ton of big movers today. We'll touch base on a few of them in just a minute. You can see, again, Matic is starting to break down. I have a key buy level on Matic around $1 or just above right here. See this major support area right here? That's going to be a good buy on Matic. If it breaks through, so number one, I'm not going to buy everything that I want to buy here at the first level. Why? Because there's a dual support level. Look at the trend line. Look at the flat line right there. That's going to be my secondary buy. That'll be where I double up on the position. And again, the key is I'm not going to buy a full position to start. Honestly, I'll probably buy like a quarter of what I ultimately want to own at a buck-ish, give or take. This will allow me to maneuver and trade. And by the way, one thing to keep in mind is that the best traders in the world enter stocks expecting to potentially be wrong. Now, you might say, wait a minute. A good trader enters a trade expecting to be wrong. How crazy is that? Well, that mentality actually gives you the ability to maneuver and trade around the position and ultimately make money on a higher percentage of your trades. Retail, the newer traders, what do? They go into a trade and they say, this is a no-brainer. Let me throw my whole account in this trade. And what ends up happening? It goes against them and they don't have any additional capital to maneuver. They're over leveraged. So when you can change your mindset to going into a trade and almost expecting to be wrong, you will actually find that you make more money than you did prior to that mentality. It's an amazing kind of weird way of thinking, but it's a money-making way of thinking. All right, we're going to go to some stocks here. Tesla, guys, take a look at Tesla. It is down again pre-market. Elon Musk continues to make a few little errors here and there on Twitter, just the nature of the man that he is. That's fine. Bottom line is we're starting to curl over. Look at the rally right into major resistance. I have a downside ultimate target of $145 down here. There's a big gap fill. It's down about $2 today. Not that big of a move, but again, it is down on the day. China stocks are lower on the day as well. I do want to point out Alibaba. I think Alibaba could be consolidating on this support, maybe one more little bit of a move down to about 85. Ultimately, this is a huge area of support. If we bring up our Fibonacci retrace tool, and I do like to use Fibonacci on these mega moves to the upside, one of the things you can also see is we're hovering right around a 50% retrace. You have a 618 right down here. So I would say anything between, at this point, 85 and 82, huge area of accumulation based on the fibs, based on the technical support levels. Okay. Yes, SE had a monster move yesterday on the back of earnings. That was a huge move. If we look at the bigger chart, though, you can see how it's a small move in the scheme of where this was. Huge move, 20% yesterday, but again, small move based on where this thing was yesterday. Or basically a year ago. Now, believe it or not, I was short with members in verified investing alerts all the way up here. We ended up making money on this, but I had no idea. And this just shows you no one's a genius. Don't ever let you let a trader tell you that they know everything. No one knows everything. I don't know everything. Yes, I was short this stock. We made money when it fell, but I, again, covered way before it got down to the $40 to $50 range. But again, that brings up another important point. You don't have to always maximize your gains. When you try to always get a little bit more out of a trade, you're inevitably going to be wrong sometimes, and it's going to reverse on you, taking away your gains. Don't be so focused on, oh, I missed selling at the top, or oh, I missed shorting at the bottom, or whatever it is. Make your mentality start to say to yourself, okay, just rack up wins. I want singles and doubles. For those of us that are baseball players, we want to remember, we want to get to the Hall of Fame without lots of strikeouts. In this game, home run hitters, yeah, sure. Home run hitters in baseball, and again, some of you guys aren't from the US, that may not make as much sense, but home run hitters in baseball, they strike out a ton, which means they're out, they're done every time they strike out. Like, I remember back in my early days, even though the steroid issues kind of came up, but you had Barry Bonds and Mark McGwire and Jose Canseco, all, by the way, steroid players. But, well, I digress from that. But the bottom line is they always struck out a ton too. They always struck out a ton. And that's not okay in trading. You don't want to strike out. When you strike out, you lose big. So what I want to do is I always try singles and doubles. I want to win it at 80% to 90% clip, and I'm just taking small gain, small gain, small gain, small gain. And that ultimately will help me make millions of dollars, and has helped me make millions of dollars in the trading world, and actually launch the hedge fund. I mean, everything that's come about that has been my change in mentality, from ultimately going from this mentality of, oh, I got to hit a home run and make 100% on this trade, to, you know what, aim for 10%, sometimes 15, sometimes 5%, aim for 10%, grab it and run. And what's crazy about this, and I discussed this with my trader buddy in the office, Ben, who's going to start doing some of these broadcasts with me, but we always find that when we take 10%, oftentimes the stock comes back down, or the crypto comes back down, and we get to buy it at the same price that we initially bought it at, even though we banked 10% on it, sometimes even a better price. And sometimes it works out more often than not that way, because markets very rarely go straight up and straight down. So that's just some of the key here. Let's look at Meta real quick. Meta is actually getting in a short range for me. Take a look at this. This was resistance right up here. Again, it did hit that level. If we come back up there, that could be a good shortable level. I would say any sort of pierce of 200, I would consider shorting Meta at these levels. Will eventually it fill the gap? Yes. Down the line, when we're not in a bear market, I do think it will fill the gap. Take a look at DKS, which is Dick's Sporting Goods. Great move yesterday on Dick's here. In terms of a chart level, I don't really see a whole lot. Let me go to my weekly chart. Now, weekly doesn't really tell me much here. So the only thing you can see here is this was resistance right up here. Notice this. Notice the 3 hits, right? 1, 2, 3, and breakout. So is it extended? Yes. Dick's Sporting Goods is hugely extended, but at the same time, there's no shortable signal here, right? And so just because, and this is another good important observation or lesson, is that just because something is overbought, you may not have the dual factors, 2 plus factors to short the stock. And so in this case, I don't have anything on Dick's to short at this point. So, it's a great move. What I now need to watch for is, let's look for a topping tail. Let's look for a reversal candle. Let's look for something like that. Now, there is one thing that I'm seeing. It's a short-term level, not enough for me to short it, but that would be the only thing. And you even kind of pierce that line. So you're even above that. But that little connector right there tells you there's a little resistance up here. But again, I don't have a secondary factor right now. So without a secondary factor, I can't really play that. Okay. All right. So continuing on here, I just quickly want to go over the Apple chart. Apple's had a big move up. Look at this failed attempt at basically a triple top right here. You have this line right here. A couple days ago, boom, boom, and boom. Resistance right up here, pullback. Basically kissing gap fill on Apple. I am ultimately in favor of Apple ultimately breaking lower. Notice the parallel line. And by the way, this will be another lesson I talk about. So what I love to teach people now is that parallels are so important. And by parallels, I'm talking about this line and this line. And what we can even do here is we can add in additional parallels. So we have this one here, right? Or this one. We can even think about this, right? Look at this. All right. So if we put this parallel right here and we drag it up, look, see this area right here, and right through here, parallel. If we go to here, parallel. If we go up to here, now we have some higher level parallels as well. So that would be another parallel. And again, I use parallels all the time because for some reason, subconsciously, human nature, just like Fibonacci, this stuff continues to make sense and give us levels to trade. All right. All right, NVIDIA, this will be the last one I do today, guys, is, again, this one has been strong. It did have a pretty nasty reversal the last couple of days, but then again, the market did have a reversal as well. For me, if it surges up, this is a huge confluence of resistance points, $260, $65. Look at all these trend lines. There's a gap fill right here. that would be your maximum upside. So it may not get there. Honestly, I think ultimately it's due for a bigger pullback after such a big run. But watch that level, guys. That is a huge, huge level to keep an eye on. All right, guys, it has been a pleasure. I'm going to at least do, by the way, this is going to become a daily event for me. So I'm going to be doing this daily. Not yet. I'm going to go be away on a cruise for a couple days, relax a little bit, but probably starting in April 1st or so, I'm looking to do these daily with you guys, a game plan. We're going to go into the market with all the news, all the macro data, all the technical levels. We're going to rock it. We're going to make money together. My present, my gift to you for you guys being so freaking awesome. You guys are absolutely awesome. Have a great rest of your day. Let's go make some money. I will be in the live day trading room. Like this feed. Come check me out at inthemoneystocks.com and verifiedinvestingcrypto.com. And if you want the education, verifiedinvestingeducation.com. You guys take care.